Welcome back to the channel. Gold crash. What did you do wrong? Is it about to crash or is it not? That's the question we are going to answer today. Remember, this is not financial advice. This is for education and entertainment purposes. So let's do a technical analysis on gold. But before we do, I explained to you exactly what was going to happen with gold, the most likely scenario. So before we jump in the chart and I show you what happened, let's take a look at that video. Where are we going? Probably we're going to test this breakdown candle high. So in my gap trading and short trading series that I have, definitely go to my channel, have a playlist, check those out. You'll see that we use these breakdown candles to trade against and to determine where we should get in or where we should get out. So what you saw there is basically a V-shaped recovery back to where we broke down. And that is the whole trading strategy that we've developed, is the breakdown candles. It's part of our gap trading and short selling strategies. It's on the playlist on the YouTube channel. Check it out. If you want coaching or you want to learn the fundamentals of this strategy, you can also join me on Patreon. So let's jump into the charts, shall we? So let's bring this up here. And here we have gold. And exactly like I described, maybe a couple of weeks ago, this was literally, I guess, a bull trap. Traders, or the perception was gold was going to go higher, and the market flooded them, with liquidity or sell or whatever. Margined accounts got margin called. Next thing you know, we're down here at 1680. Only for the market to resume its uptrend. And right now, it's looking good. So part of the short selling and gap trading strategy that we do is we identify breakup and breakdown candles. And now, whatever, we always stay current. We don't care about what happened here. We're always looking for the most current levels. And that's what we use to trade off of. Personally, it's not financial advice, but I don't trade gold. This is something that I just buy and hold for the long term. Whenever I see dips in the market, it's just good opportunities to buy. When I see like fear like this, volatility, there's just opportunity to buy some for the long term. But let's still do our analysis. Let's use our fundamentals on how and what's going on here. So we had our correction, and we had our doji. And then we had a pivot and a reversal. This was a level that we needed to close above of, which is 1764-ish. And we did. We closed a strong close above that level. We killed time off the clock here for 5 days. We rested, built energy for another move higher. And then that provided, another trading opportunity. We talk about this often. Breakup candles, the low of the breakup candles are great entry points. And when the market comes back and tests this low, it's always a good entry. And we can talk about risk management in another video. But here we go. That would have been a good entry for a continuation upward, because we are in an upward trend. We're doing higher highs, lower low, higher high, lower low. We are going in that direction. So all of that leading to what's developed now, which looks like to me a bull flag pattern, right? This was a wedge-ish pattern, right? Or bull flag. Here was another one. And it seems to be doing this pattern here. It really shook out the weak hands. And I think some players really got in here and bought the bottom. And now we're just ripping higher. So what will have to happen? What's the next signal? What's the next level? So it's 1930. The good old 1830s. The good old 1830. Is where we will see gold test, right? So what will happen most likely, just like it did here, we're going to have a move into this number, and most likely, right, like it happened here and here, you're going to have some type of pullback, and retesting this breakout area, and then it will resume higher. So we're just going to follow that pattern of breakup, test, support, breakout, test, support, breakout, test, support, and these are the next targets for gold that it needs to get through. And then I think there's a long-term downtrend here that we can maybe focus on as well. As you can see, I only use trend lines and prices. I don't use MACD, stochastics. Price is the ultimate arbiter. So we really want to focus on that. That's what we do differently on this channel. So if we look here, right, we're above this. We're kind of, and then we have, it's not very clean, but I guess you can say we kind of have a horn there. And if we go and just clean some of these up. So there is a overarching downtrend. So really, I'm going to expect, I'm not going to expect so much resistance here, although we did a double top, but I think we will break through that. But really where we need to look is here. So I think here is where we're going to see, a larger pullback at about 1860 before we're able to move higher. So what would that look like? So I think we're going to go here, trade up here, kill time off the clock, and then we're going to break through here, maybe in one candle, get to 1860, and then we'll either trade along this line here for some time and then break out. The second option is retest this support. Absolutely important. This is a critical number. 1830 is very important. So most likely we're going to see this second scenario, and then we're going to move higher to then retest this breakdown candle high here. That's my analysis on gold. That's where I think it's going. It's in a long-term bullish trend. So no matter what happens, these larger dips are always going to be in a buying opportunity. Have that long time frame, dollar cost average, all that good stuff. This is not financial advice. Again, if you like this, comment, subscribe, like. Thank you for watching. I'll see you tomorrow.